Good morning, everybody. Welcome to today's 1 million by 1 million online rendezvous. I imagine you're all in different time zones. My time zone is Pacific time, so we are in the morning of Tuesday, January 28th. 1 million by 1 million, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we do all kinds of things. We do extensive online mentoring of startups and entrepreneurs. We have all kinds of touch points for content. And we also do rendezvous, both online and offline. This is an online rendezvous. And we also have in-person rendezvous in Silicon Valley in Menlo Park. So typically, I don't know if you've been here before, but I tend to answer questions. So we encourage people listening to ask questions in these sessions. And then I pick up these questions, we assemble these questions and answer these questions at subsequent sessions. So I'll see how much I can cover today. And then I will definitely keep an eye on the questions that you're asking. So we've been covering platform as a service quite extensively. So the cloud stocks and cloud entrepreneurship is an area that we cover very, very extensively. And there's a lot of questions that we get on that topic. So today, the first question I will answer is, which SaaS company is doing a strong Paas implementation besides Salesforce.com? And Paas being platform as a service. So let's go there. Among our list of top 20 cloud stocks for 2020, Atlassian, and the NASDAQ ticker is TEAM, team, is the top mid-sized player for Paas. Last week, it reported a strong second quarter that beat estimates. Therefore, the second quarter revenues grew 37% to $408.7 million. And that beat market forecast by a lot. Their forecast was $389 million. Net income was $124.1 million compared with $45.2 million a year ago. So the company is outperforming on its financial metrics. And what I really want to focus on is Atlassian's marketplace. Atlassian's marketplace, which is their app marketplace, has reached massive scale. And recently they're surpassing $1 billion in lifetime sales. It is now one of the largest enterprise software marketplaces alongside AWS from Amazon and Salesforce. To boost its efforts, Atlassian in December announced Forge, its new cloud app development platform. Forge makes it easier and faster to develop cloud apps by providing compute, storage, security, and ready-made UI components. Forge is built on Amazon Web Services, Lambda serverless function as a service platform that also helps in managing infrastructure and elements such as authentication, identity, and scaling. Forge is expected to increase the number of third-party cloud apps available on Atlassian's marketplace, creating more value for cloud customers. There are currently over 4,000 apps available on the marketplace. In addition, developers have built 28,000 apps for their in-house teams. Across Jira Software and Confluence, over 60% of customer instances use at least one marketplace app. So this gives you an idea about how active their marketplace is and how many apps are being developed there. I think in my assessment, this is probably the most promising app marketplace out there. And I will be writing more about the implications of these Paas and Paas marketplaces and so forth. in due course. And so we'll discuss all that in due course, and you're welcome to ask questions on this topic. A follow-on question that I want to answer today is, how can small startups take advantage of the Paas trend, the platform as a service trend? And in answering that, I want to point you to a concept called bootstrapping by piggybacking. We've discussed all kinds of creative bootstrapping mechanisms in this series. My Big Ideas 2020 contribution is yet another technique that I believe would be particularly relevant and powerful going forward. One of the most exciting trends in the technology industry currently is platform as a service and developer ecosystems. The company that has knocked the ball out of the park with their past strategy is Salesforce.com. They launched their platform over a decade back, and many substantial companies and numerous sustainable small businesses have been built on it. Viva, for example, was built this way with a small amount of capital, and today boasts over $1 billion in revenue and over $20 billion in market cap. My hypothesis is that of the 200 plus SaaS companies that have achieved scale, we would see a set that would break out and become significant Paas players. This means the industry would have 20 to 50 Paas platforms with serious developer ecosystems and app marketplaces. The Paas vendors would want to sell the apps developed on their platforms to their customer bases, take 30% in platform commission, and help support robust businesses while scaling themselves exponentially. Entrepreneurs looking for a capital-efficient strategy should seriously consider bootstrapping by piggybacking on these Paas players. So if you want to look at my 2020 Cloud Stock recommendation, you will see that platform as a service features big in that roster. So top 20 cloud stocks for 2020 is a piece that you may want to look up on our blog. And also, entrepreneurs looking at bootstrapping to an exit, you should know that it's a lot easier to get acquired by a platform player if you've built something credible on their platform. For recent acquisitions on top Paas platforms, see Atlassian and their acquisition analysis. So I have analyzed Atlassian's acquisitions extensively. We talked about this a few days ago as well. So, they're constantly acquiring. A recent acquisition they did was Good Software, a developer focused on its Confluence platform. Code Barrel, another acquisition from their platform. So there's a whole bunch of acquisitions that happened of bootstrap companies on these Paas platforms, and Atlassian is definitely leading the way there. Salesforce has been very active in this trend. Okay. I will switch topics a little bit and go to the topic of corporate intrapreneurship. I'll take a few questions on this topic. The first question is, in corporate intrapreneurship, what role does TAM play? My number one comment on this topic is that tyranny of the TAM is less severe in corporate innovation. I gave an interview to Jim Ushner for the Research Technology Management Journal, where he asked me about this topic. And what I said was, if you think of entrepreneurship outside of a corporation, often business ideas with a total available market of 200 million, 300 million will get ignored. It may not be possible to bootstrap them, but venture capitalists will not fund them. These are ideal for corporate innovation. Let's say you have a product line and you have a customer base for that product line. Perhaps there are opportunities to innovate in that same general space. You have customers who are giving you input. You have engineers and product marketeers inside the organization who have perspective and who have ideas, people who have domain knowledge. They might come up with a proposal for a new product or an adjacent product that could result in a couple of $100 million in revenue. That is very, very worth doing for the corporation. It may require $5 million in investment that could yield a $200 million, $300 million business if you train your workforce in being able to identify such opportunities, if you teach them how to validate the opportunities and frame them in the same way that an entrepreneur would, you make it possible for them to clearly present their ideas to management to consider for investments. We, in 1 Million by 1 Million, can train these people to develop and present these ideas. We do intrapreneurship work and training intrapreneurs. You will then get well and analyzed, well articulated ideas, and you can look at the market and the investment required and make a very good informed decision on whether this is a go or a no-go. So, as you know, if you're a corporate innovation person listening to this, or if you're a CEO of a company, larger company listening to this, as you develop your corporate innovation methodology, do keep this opportunity in mind. There's a gap in the startup world because of the singular focus of the VCs on hyper-large TAM, ultra-fast growth market opportunities. Corporations don't need that. You have a wide open opportunity in which to innovate, with the assumption that TAM doesn't need to be $1 billion. Okay, the next question I'm going to answer also on corporate intrapreneurship is, what role does prototyping play? So my philosophy, at least in the IT space, is that we can safely assume that people will be able to build their products. Prototyping is not what we emphasize until later in the process. The first thing, the first order of business is answering the question as to whether there is a business case for doing the project. Prototyping will come later if we decide that the business case is sound and warrants investment. Let me be clear. You need to understand the customer value proposition to create the business case. But you don't need to write a single line of code to do this. You can understand whether there is value in what you are proposing to do by talking to customers. We encourage people to get an immense amount of customer immersion before actually developing their products. Product development is an expensive process, and we want to get business case validation before investing in product development. The methodology we are using to run corporate innovation processes on the 1 Million by 1 Million incubator in a box platform assumes the above, and accordingly trains intrapreneurs to first position the product, assess business model, pricing model, bottom-up TAM, etc. I'm happy to discuss this topic in the comments, so please feel free to weigh in with your points of views, questions, etc. The last question that I will answer today on corporate intrapreneurship is, in corporate intrapreneurship, what role does unstructured time play? Google became a pioneer in the domain of corporate innovation some years ago by introducing the notion of 20% unstructured time in which employees could work on whatever they wanted. Other large enterprises followed along and started experimenting with their own interpretations of unstructured time. Most came to the conclusion, including Google itself, that completely unstructured time is not productive and does not yield innovative ideas or projects. On this subject, I want to call out another specific point from my previous discussion on methodology of corporate innovation. Just to remind you of the context, we're discussing on the basis of the 1 Million by 1 Million incubator in a box methodology that we apply to structured innovation in large organizations. We have had quite a bit of experience of applying this methodology. So Let's say you have an idea and you're an employee of a corporation. The question to answer is, do the corporations also grant the time to work on the idea, or do the participants, operate on an extracurricular basis? So the answer to that is it depends on the policy in the organization, but it's generally considered extracurricular. It's similar to other development programs. If you're going to do an MBA on the side while holding on to your job, the company may pay for the MBA, but they're not going to let you ignore your day job. That's not how corporate learning works. It's the same philosophy here. This is essentially an entrepreneurship MBA, and that's the spirit of the program. You're going to have to do it on your own time, nights and weekends. To elaborate, what we're seeing is that most engineers have high IQ, but no training or experience in how to conceive a new product, validate its viability, design a business model, attach a pricing model to it, and calculate the size of the market opportunity. However, being extremely intellectually capable, given the right framework and training, these engineers learn very rapidly. And we have trained numerous engineers in the fundamentals of how to bring a product to market and the principles of intrapreneurship and entrepreneurship. So once they have that framework in their heads, they can also rapidly process their experience and start looking for gaps and opportunities, pain points around which innovation can be catalyzed. This more structured process is far more productive than a blanket 20% free time to do whatever, which is what Google was doing. I don't think they're doing it anymore because I think they have realized that this is not really productive. Okay, that's all I have in terms of corporate innovation topics. I'm happy to answer more. Please ask questions. I will review them and come back to you with more answers. The question I'm going to take next is, how can I get feedback from you on my venture? Well, it's actually very easy. I am extremely accessible. All you need to do is go to the free public roundtable section of our blog, 1mby1m.com. 1mby1m offers free and online mentoring roundtables for entrepreneurs looking to discuss positioning, financing, and all other aspects of building a startup venture. Up to 5 entrepreneurs who registered to pitch will be able to present their businesses at a particular roundtable. They will get straightforward feedback, advice on next steps, and answers to questions from me directly, and possibly some of my frequent guests, CEOs and VCs. You can register to attend, to listen, learn, and join in on the conversation via live chat. All who register will receive recordings by email the following day. Upcoming roundtables are free roundtables, online roundtables, are Thursday, January 30th, 8 a.m. Pacific time. Also Thursday, February 6th, February 13th, February 20th, February 27th. All 4 Thursdays in February, we have 8 a.m. Pacific time roundtables. All you need to do is go to the free public roundtables page and register for one of these, and Maureen Kelly on my team will get back to you with confirmations and instructions. Those who register to pitch will receive instructions on the preparation required, including a roundtable slides pitch template. We also recommend using the 1M by 1M self-assessment tool to help prepare to pitch, also available for free on the website. Several entrepreneurs interested in pitching have first expanded their knowledge of the essential components of building a startup by joining our monthly 1M by 1M basic program and going through the 1M by 1M curriculum. It's a digital curriculum. By pitching, after learning the curriculum, entrepreneurs get much more takeaway value from their interactions with me during the public roundtables. Please note, We work exclusively with IT and IT-enabled services businesses, and these roundtables are public forums. The recordings of all sessions are shared online, and entrepreneurs who pitch will receive media exposure through the roundtable recap column, which is posted on our blog and elsewhere. Members-only private roundtables are offered as part of the 1M Premium program, which you can also join, and that has a $1,000 annual membership fee attached to it. Okay, that is all I have planned for today. We will be back next week, next Tuesday morning, 8 a.m. Pacific time, with one of these sessions, but I hope to see you on Thursday at a free public roundtable with or without your business. You could come and listen without your business plan, but if you want to come and pitch, that's fine too. See you soon. Thank you very much for coming today.